Did you know that experts predict a 100% increase in Tesla's shares due to the company's crazy plan? Despite a number of problems, many investors are still optimistic about Tesla stock. They are optimistic that Tesla can get past any obstacles and keep up its good performance. I doubt you would want to overlook this information. The optimism Cathie Wood has for Tesla is not new. Tesla is one of Wood's top holdings. Wood is the manager of ARK Invest funds, which include the ARK Innovation ETF. Actually, Cathie Wood, under the direction of ARK Invest, is quite confident in Elon Musk's Tesla project. It should come as no surprise that the stock accounts for a full 10% of the fund's capitalization. When it comes to investing principles, Tesla meets a number of Cathie Wood's requirements. ARK Investment Management LLC's founder, CEO, and chief investment officer is Cathie Wood. When it comes to selecting stocks and spearheading investments in new technologies, Wood has established a solid reputation. Wood is frequently referred to as the most underappreciated investor in the game because, in addition to being extremely convincing in her investment ideas, she also has track record to support her remarkably astute assertions. It's also well known that Wood occasionally makes bold predictions regarding the future. She is a supporter of Bitcoin, believes that Tesla, the manufacturer of electric vehicles, is still undervalued and projects that the firm will eventually be worth $3 trillion. When she first made the statement, people laughed at her. But now that Tesla's market value is $923.77 billion as of May 4th, 2022, it might not sound so outrageous. One of the reasons people follow Cathie Wood and put money into her accounts is because of these forecasts. By the way, Wood stopped Elon Musk from repurchasing Tesla stock and taking the business private once more in 2018 by intervening in the form of an open letter. The letter proved to be something of a phenomenon. There, Cathie Wood presented a 5-year bull thesis for Tesla stock, predicting a price as high as $4,000 for the company by 2023. In his early stock repurchase program, Musk was content to pay just $420 for each share at the time. If you look at the sales growth over the last 5 years, it has compounded at a rate of about 48% annually, and you may remember that during a period of significant controversy surrounding Tesla. For a number of factors, our projection for the next 10 years is between 50 and 60%, depending on whether you take our bull or bear case, says Cathie Wood. Wood lists 4 entrance hurdles that appear to have increased in Tesla's advantage. Battery technology comes first. With the exception of a few in China, Wood claimed that Tesla is the only automaker that has chosen to ride the consumer electronics industry's cost curve. This is a result of the batteries used in cell phones and computers changing. According to Wood, when Tesla made that decision, automakers and analysts ridiculed the business because of well-publicized battery explosions on airplanes that led to the outlawing of that type of battery. Because of that, though, its cost is lower today. The cost of its battery pack system is significantly lower than that of other auto manufacturers, Wood stated. Those other automakers will lose money on electric vehicles while their sales of gas-powered vehicles decline if they wish to compete with Tesla. Less power or range will be the alternative, which is why there are numerous variations around it. Therefore, in terms of cost reductions compared to other automakers who chose to employ lithium-ion pouch technology rather than the cylindrical batteries that Tesla utilizes, the battery is still 3 to 4 years ahead, adds Wood. According to Wood, Tesla's own chip is the second barrier to entry and the most important one in terms of growth and valuation. Tesla is the only auto manufacturer to have designed its chip, Wood stated. The others didn't follow. They didn't have their own chip. They didn't have the vision. Wood claimed that Tesla is studying Apple's business practices. She remarked, recall that Apple was the pioneer back then. In terms of cell phones, the winners were Nokia, Motorola, and Ericsson. She clarified that Apple was a startup whose creator, Steve Jobs, had the vision that it would become more than just a phone, in other words, a computer in your pocket, and he succeeded in doing so. I'll never get over how happy I was to be able to use my phone to surf the internet. Wood remarks, I just thought this was revolutionary. She thinks that Tesla is starting something groundbreaking, just like Apple. According to Wood, the reason Tesla is so far ahead of its rivals is because they are still in the early stages of their development. According to her, the vehicles they have supplied thus far don't even come close to matching the Model S's range or other specifications from Tesla. The artificial intelligence chip, which is all about autonomy and is only being used by Tesla, is the other entry barrier. Wood claimed that their analyst James Wang, who spent 8 years working at the artificial intelligence giant NVIDIA, was astounded by the specifications of Tesla's semiconductor. According to Wang, Tesla is 4 years ahead of all other automakers in terms of available semiconductor technology specs. This is critical to Tesla's objective of using electric vehicles to become autonomous. Artificial intelligence initiatives are directly related to being autonomous, and the winner will have the most and the best quality data. The nearest rival, Waymo, only has 20 million real-world driving miles compared to 14 billion for Tesla. Lastly, the fact that Tesla is the only automaker still providing over-the-air software updates to alter performance gives them an advantage over other businesses. The fact that Tesla has amassed billions and billions of kilometers of actual driving data presents the next obstacle to entry. Andres Karpathy, the AI director of Tesla at the time, said that the firm had more corner cases than any other company on which to train its systems. Wood claimed that since Tesla already has over 1 million robots, including her Model 3, roaming the globe gathering data and reporting it back every day, other competing businesses will never be able to catch up. Over-the-air software updates are another barrier to entrance, according to Cathie Wood, who finds them surprising. Wood revealed that after purchasing her Model 3 in 2018, she has never needed to have a problem with it fixed. It appears that Tesla has identified and fixed any issues she may have had before she even notices or feels them. The only problem I've had is a nail in a tire, and of course software could not correct that, but that was it, Wood says. According to Wood, those are the entrance hurdles that give Tesla the advantage. Their base scenario, which is currently approximately $800, is $3,000 in 5 years. Our confidence in that has grown because what we're seeing now is Tesla able to scale EV manufacturing in a way that no one else, except perhaps Biden in China, no one else is doing this yet, and Tesla had to go through a huge learning curve to get their Wood ads. According to Wood, most other automakers won't be able to match or surpass Tesla's combo unless they really want to. Lose money purchasing automobiles. Wood stressed how crucial that is from both a performance and a range perspective. When asked what she felt about big businesses trying to compete with Tesla in the production of electric vehicles, Wood said that they are failing badly. This manufacturing process differs from that of conventional vehicles. The game is very different. 2 years ago, we predicted that Tesla would account for 25% of the market for electric vehicles. Star investor Cathie Wood says, "We're now projecting that Tesla will capture 25% of the global vehicle market in 5 years." With electric vehicles accounting for nearly half of all sales, ARK Invest has updated its open source valuation model for Tesla stock, which includes forecasts for 2026, capital efficiency estimates, and autonomous ride-hail assumptions. ARK Invest believes this approach makes the research the company has done on one of its major holdings more transparent for investors. ARK has established a price projection of $4,600 for Tesla by 2026 based on its examination of the vehicle. According to the company's study, there is a 25% chance that, in a bad market, Tesla shares will be worth $2,900 in 2026, and in a bull market, $5,800. With a decrease from $84,000 to $7,700, Tesla's capital expenditure per extra unit of capacity has improved. ARK now projects that Tesla will only spend $2,000 to $7,000 per additional unit of capacity in 2026, down from its previous projection of $6,000 to $8,000 to $8,000 to $8,000 per unit of capacity in 2025. In order to receive more wild updates about Tesla stock, make sure to subscribe to this channel.